50% decline is coming.
But first, let's hit it. Hi, it's Alan Victoria. Welcome to our channel and podcast.
And if this is your first time in our podcast and YouTube channel, make sure you subscribe and get notified.
Honestly, call and text all the time at 252-327-3357. We love talking to you. Do not be shy. Also, don't forget to grab our buyer's guide and seller's guide in the description below. Also, visit alanvictoria.com for all your home needs.
And today we want to again discuss about a couple of articles and also lots of video of YouTubes and lots of social media posts about crash and declining for 50% that is coming.
I've been watching these videos since 2008 because these Doomsday Preppers have been telling me that everything's going to be doom and gloom since for the past 10 years, and it hasn't happened. So, I mean, I can see what the economy is. I don't have my crystal ball. I do know what's going on with right now. And we can kind of talk about some of these facts that these YouTubers who say the end of the world is here is going to talk about, because really, let's have a real discussion with real
and
honest
really
facts.
is like connecting those dots to the housing market that we are here to talk about, because our channel is about real estate.
Absolutely. But I also do have an econ background, so I love talking about economics all the time. So when I hear these things, I go, wait, what? That doesn't make any sense. And I'm going to kind of talk about why it doesn't make sense. That way you feel safe when you're talking to us about buying a home.
Exactly. And now we're going to go to the economic indicators, and really we started basically connecting dots from the interest rate to the housing market. No?
Okay, so number one, these doomsdayers are going to tell you that the interest rates and the housing are at its peak level. Mortgage rates are dropped. Treasury yields are up. And this is stopping the economy, right? It's just putting the economy in its track. But is that true?
Is not true, and the reason is one of the 400 items that is coming with the inflation is going to affect is the housing market. No?
Okay, he's talking about the CPI calculator, which is a great idea.
Yes.
But really what we're going to look at in this thing is really understanding that inflation is prices are increasing. This is something that's happening not just to housing. It's happening in all sectors of the economy. And this does point to, while economies are going up, we do see, is there growth still there? What's happening to unemployment? So we have to really look at what's going on. And I do know that Warren Buffett the other day decided he was going to cash in and get some more treasury notes, and some people went, oh no, a recession is coming. But just because one person did one thing let's discuss that a little bit more. Let's talk about those housing market, because he also bet heavily on those housing market.
Exactly. And the housing market, basically, we wanted to talk about what happened with the demand and supply and what is our seller's dilemma. No?
Right. So let's just talk about Warren Buffett a little bit more. Right. The recession is coming. He told us that he bought there, but he also literally just bought 20% of new construction from D.R. Horton, Lennar, Ryan Homes, all at the same time period. So while people are saying, oh, recession, we're also he's not looking at it in terms of housing. In fact, he's seeing a boom in housing because he understands that people want to buy a home. This is a demand that's being pent up right now because of those high interest rates. Interest rates being that high, we have seen with interest rates being high, less people are applying for mortgage. What's the last time that happened?
It was basically in 1979.
1995.
1995. Okay.
Right. It's showing that there is a downturn, and then but here's what these doomsdayers are saying. Oh, sellers are going to let their houses sit on the housing market longer. Price decreases are going to happen. But is that true?
No, it's not true. Of course, they think that this is true, but according to what supply and demand we were talking is still, as we are talking in this video, 4 million buyers are in 2023, 2024, and we don't have even the new construction supply, which is 1.9 million homes. We don't have really what's supposed to be.
Okay, let's talk about this a little bit more in detail. So sellers are sitting on their houses, and no, they are not stuck in their houses. They can do whatever they want with them, but they have a 3% mortgage on their house. They're feeling confident in their house. And they're like, hey, I'm happy where I am. It's happening. So sellers are saying, do I want to sell my house? So there's a low supply in general, which is why people are betting on these D.R. Hortons and the Lennar and the Ryan Homes like Warren Buffett. Why? Because they do two factors. They're going to help people with that interest rate because they have their companies to where they say, hey, we're going to buy down your rate. And then also they're going to give you some closing costs so you can get into those houses much cheaper than you can get into a regular home, especially in this current market, which is making demand for new construction to increase.
Exactly.
Again, why Warren Buffett is going into it. And then also they're talking about like, oh, if Airbnb goes down, but Airbnb has been something people have been fighting for a long time, and that's still there. So I wouldn't say that that's going to be there. So going back to your point about 4 million people.
Yeah, and we talked that 4 million people actually still is going to be home buyers, and more homeowners are staying where they are. No, and we definitely have lots of home equity the past 3 years after the COVID. No,
right. Let's move on to businesses. Okay.
Exactly.
Okay, so I see these doomsdayers saying small businesses are struggling in America, especially like Florida. They've seen a 50% decline. Oh no, the end of the world. But let's look at that in a little bit more detail.
Yes.
Okay, so when you look at 2020, we see that there was a post-pandemic surge because people just finally got to leave their homes after being stuck at home. They had their PPP loans, so it could be forgivable money. So they had money in their pocket. They were stuck at home for a long time. So what did we all do? We all wanted to go away on vacation. We all had money to spend because we weren't allowed to spend it for a while because there was nothing there. Exactly. What has happened now?
And now that you're talking about the post-pandemic surge?
No, I'm talking about what's happening now.
But most small business owners who are working before the pandemic go on the state in interview after interview.
What?
No?
What are they stating?
You tell me what
that they're stating that everything is actually more just back to normal to what it was before the pandemic. So the surges have ended. This doesn't mean that the economy is crashing. It just means that we were all stuck at home and now we're not home. And now we're kind of just going back to our new normal, which is nice. It means hopefully we're not having 16 to 18 weeks again for those, passports and things like that. But I mean, which we had to wait for.
Now, let's talk about some historical context. Because historically, government all tend to decrease the interest rate during the election years to basically stimulate the economy activity. No?
Right, which was interesting to me because I literally read I showed a graph to somebody and said, look, 72, 76, 80, 84. What is going on in those years? Election years. Which means you can see that there's always a dip in interest rates in election years historically. Do I have a crystal ball of what's going to happen next year? No. But can I say in 2024 there's an election? Yes.
Exactly. Therefore, we definitely predict that should be a little bit interest rate
should be going down a little bit.
And now we wanted to talk about counteracting over enthusiastic investors.
Now, what happened when those interest rates were 3% was a lot of people who were like, hey, maybe I should be like an investor. Maybe I should buy a second home, a third home, and then rent it out. When those interest rates went up, those investors kind of stopped thinking that for many of them because they're like, does that make sense from my math? However, a lot of people who wanted to be first-time home buyers actually now have a great opportunity to be a first-time home buyer because they now have less competition from those investors. I mean, at certain price points, you're going to still have a lot of investors.
And that's why it takes us to the next point, that demand still remains very strong. And the reason says, according to a statistic, we have 4 million buyers in 2023 to 2024.
And there would be more if they knew that they could get a good deal, which is, again, why we're telling you about that new construction that's happening. And we're happy to talk to you because you should really have a real estate agent when you deal with new construction as well. But you should make sure that you're understanding what is going on with the housing market and understanding that higher interest rates does not mean that there are no deals out there, or maybe the house that you love will show up on the market and it is time for you to get the house and you will have less competition and you can always refinance it later. In fact, we have a lady who's just asking companies who's going to give her the best deal, who's going to give her free refi in a couple years. Exactly. I mean, that's smart.
And the next thing is that the future homeowner, they should think about it, building equity in their homes that they're going to own.
Right. So if you're worried about inflation and if you think inflation might happen again, the best thing to do is be a homeowner. Because if you're a homeowner, that means that it's a bet against inflation because your price is never going to change. Your monthly payment's never going to change. So which means that you can start building equity because every payment puts towards equity, which means go towards ownership. So you will have a wealth building tool.
Exactly. And you safeguard yourself against the rent volatility in the market. And now let's talk about other economic, basically matrix or perspective. The first thing that we wanted to talk about is asset evaluation.
Right. So basically your home to income ratio and is how you get the home. And that's kind of always the scary part of buying a home, because you have to look at your debt to income. But once you have, and the stock market's saying ratios are at a all-time high, the average American is getting excluded. But if your assets are in a good place, it is actually a great time to buy a second home, your first home even better, because you have less competition out there and people are pricing themselves out of the market entirely. And that is kind of a danger for them in the future, because how do you fix when you go into debt? Don't go into debt is my answer to everything. Don't go into debt if you can help it. I made a $300,000 mistake that I'm very lucky that I'm now free of, but yeah, I don't recommend debt for anybody.
Exactly. The second thing that we wanted to talk about, the matrix, is economic reset, because an economy downtime might be a necessary corrective measure.
Right. Recessions are scary to talk about, right? Let's just talk about that. Recessions are scary. Are we heading towards recession? I don't have a crystal ball, but we do know when you're in your home, it's easier to weather a storm when you're batting down the hatches and you just kind of wait out the storm and then you kind of figure out how to go from there. But what about inflation?
Now, exactly. Inflation and housing. Historically, home prices basically tend to follow inflation trends. Against that, many of the belief that they say is going to crash, everything is going to be 50%, but that is now exactly worse. The current inflation adjusted home prices, right, at records high. No,
right now these people who are doomsayers are saying rents are declining and wages are slowing, but I don't know where wages are. I don't run all crystal balls, but I do know I look at the rents every single month in my area, and it's increasing. So I don't know where that data is coming from, because it's quite the opposite. Again, I do not have data on wages. I do not run on it. I do not run businesses like where there's tons of unemployment or cyclical and anything like that. But we see in the housing market data, the math is not there to what they're saying.
Exactly. The next thing is basically investor caution.
Again, interest rates are going to slow you down.
Exactly. Let's talk about economic balancing act.
Yeah.
No? What is that?
Well, the government's trying to do something. They're trying to stop the inflation, and they don't want to cause unemployment, because those are the two things the government always tries to interfere: unemployment and inflation. So obviously we have inflation. That's why they've increased the interest rates. It's supposed to be a temporary measure to stop the inflation. Hopefully it does work. Everything will go back to normal. Does the government do anything right? That's a whole other question that I would probably say we can have that discussion at a bar, which we don't have in Greenville.
Now we wanted to talk about some
other economic
issues like a demographic and societal shift.
Right, so the boomers are retiring. This is the number one workforce in America. It's the biggest population. Our parents are now retiring. Which means that the labor market is actually in a contraction period, not because there's no jobs, but because there's no people in the higher level positions.
The skills, yeah.
Right, so it means the Gen Xers, the millennials, are all getting higher wage jobs because, again, those boomers are retiring. So there's more opportunities for at the higher end of many places. And another thing that's happening because of this retirement is
wealth transfer.
Right.
Which an ongoing shift in financial resources within the families that is going underway, no?
Right, so there is an inherent value of home ownership that we all understand. Basically, if nothing else, if you don't care about inflation, you don't care about economic society, you don't care about appreciation, there's still this universal need for shelter. It's not just a luxury thing. It's not like my fancy handbag. It's a necessity that we need. We always need shelter. We always need a home. And so no matter what is going on with the economy, people need homes. And what's the other thing?
That's why it's a safe investment. This is the last thing that we wanted to talk, because it's always one of the safest bets.
Right, because mathematically you have to make sure it makes sense for you. You can live comfortably. I don't recommend balloons. I don't recommend bubbles. Those are scary things. I say understand what your debt is, keep it at a minimum, and be happy with what it is. And that's what many people who already have done the switch are happy with. And you can do it too.
And always looking at the long-term also benefits that being homeowner brings for you, that we talk in the many videos about it. that really give it a safe place for you and your family without your interest rate goes out or your monthly payment, and also you get the home equity every year.
So I hope you loved us talking about economics and all those doomsdayers, because the truth is it's not a doomsday scenario, and we wanted to kind of bring some economic perspective into this that we can talk about. And you can buy home.
And don't forget to call us if you are home buyers or home sellers in the area or out of state at 252-327-3357. And we are here for you. Support our channel by subscribing in it. Thank you, and see you in the next video and podcast.